Hello and welcome to the business edition of PM Express with me, Philip Nanfuri. And today we'll be talking about Ghana's insurance sector. Now, for the past 2 years, we've been discussing the financial sector in Ghana. We've looked at the banking sector, capital markets, pensions, and even insurance. But it seems more often than not, we skew the conversations towards the banking sector. And today I want us to focus on Ghana's insurance sector. We have with us Seth Eshen. He's the head of supervision of the National Insurance Commission. And he'll be walking us through what the Insurance Commission is doing. I'll ask him a number of questions on the way forward for Ghana's insurance sector. Bear in mind that earlier on this year, in February 2019, we had Seth Eshen again on PM Express Business Edition. This time we were live in the studio and we had on, together with him, a practitioner in the insurance sector. And we are going to refer to some of the things we said in that conversation. So don't be lost if you hear me referring to when he said. We just need to build up on these conversations. And we'll start off with the change to the Insurance Act. We want to find out from Seth if it's going to be an amendment or we're going to replace the Insurance Act 2006, Act 724 completely. We'll find all this and more. The claims changes, the number of companies. We know that during the banking sector cleanup, some of them went down. Has it affected things, confidence, etc.? We'll find out all from Seth Eshen, Head of Supervision of the National Insurance Commission, on the business edition of PM Express with me, Philip Nanfuri. We'll be right back. Right, thanks for staying with us. Seth is here. We're going to delve into the conversations. He's given us his time on a very busy schedule. He's a very busy man, and he's going to be walking us through what the National Insurance Commission is doing for the insurance sector. Seth, I want to say a very big thank you for your time.
Thank you as well.
So I want us to start off with the National Insurance Act, 2006, Act 724. When we had our discussion earlier on in the year, you mentioned that there were going to be some changes. Addition of some compulsory insurance products, I beg your pardon. And if my memory serves me right, and if my notes are correct, group life insurance, workmen's compensation, professional indemnity, and landlords and tenants. Am I right?
Yeah.
Very good. Now, the first question I want to ask is, the change to the Insurance Act, is it going to be an amendment or a total repeal of the Act?
So the change is going to be a total repeal of the Act, and then we'll introduce a new Act to it. The reason is that the number of changes that we are doing, it becomes more practical if we have one Act which is consistent. So that is going to be the case. I would just add that we would have basically 3 documents, which will be the regulatory framework. The first one would include high-level principles, and those will be passed by an Act of Parliament. And there will be what we call regulations. So the regulations are what people call legal LIs, for example. So those ones will be laid by in Parliament, and if nobody objects, then after 21 days, yes, it becomes law. So how it works is that those ones would be changed, can only be changed through going through the Minister of Finance, who is the minister with responsibility for us. And then there will be what we call directives. So directives are very technical things, like which assets can an insurance company invest in, all those technical things. Those would be directives that would be issued by the Commission. So you have these 3 different legal pieces of documents which form the legal framework that governs, that will govern the insurance industry within Ghana.
I would like to find out what pertains in the old Act that needs to be changed, or let me put my question properly. So I know you'll be adding a couple of new compulsory products in addition to the motor and commercial building insurance. What again is going to be in this that's going to transform the insurance sector?
Okay, so the key things that are going to be in there is that there are certain things that we are currently operating with. We have what we call the claims management guidelines. So that guideline says that if you submit all your documents to an insurance company and it's a motor insurance business, they need to pay you within 5 working days. So what we want to do is that we have issued those as guidelines to the insurance industry, but we want them to have greater force of law. So it will come through as directives, for example. So there are other directives that we've issued. We want to put them on solid legal backing. So for example, the no premium, no cover, which states that you need to pay for insurance before you can enjoy insurance. In addition to that, there is the compulsory insurance that you mentioned of. So currently we have this insurance policies as being compulsory. We have the motto. We have insurance that should be there for fire, for commercial buildings. And then it says that if you are importing any things into Ghana, apart from them being personal, for personal use, then those properties should also be insured, or those goods should also be insured. So those are the 3 bits that are currently compulsory. So in addition to that, we are going to have additional ones. And the key things about the additional ones that are coming in is that they are there to protect innocent third parties. And what we mean by innocent third parties is that you may have a nice car, a Lamborghini or whatever it is. If you drive on the road and God forbid you hit a pedestrian or you hit someone's kiosk, you need to compensate that person. But you being able to compensate that person should not depend on whether you have money now and then. So you need to have insurance that you need to protect the innocent person, the innocent third party that you hit or you injured or you destroyed their property. In the same way, we are looking at professional indemnity. So professional indemnity would exist for people like lawyers, for doctors, for pharmacists, some very critical professions. And what it seeks to do is that if through the negligence or the mistake of these professionals, a building gets destroyed or a building collapses, then the people who suffer loss will get compensation because of the mistakes that the engineer or the architect did. So there are these compulsory insurances that are all coming into place in order to protect the innocent third party. The other bit which is there is what we call group life. So the group life exists to give insurance, God forbid you work for multimedia, and God forbid you pass away either at home or during the course of your work. What it does is that it gives you some protection for your family, for your estate. So in most countries it's about 4 times your annual salary or 5 times your annual salary. So that is what we want to introduce here, such that if people get injured or people die in the course of their work, whilst they are working, they get that compensation. The key thing that I would mention there is that it is an extension of what we call the Workmen's Compensation Act. What the Workmen's Compensation Act says is that whilst you are working, if you die whilst you're at work, or if you die or if you get injured in the course of your work, then your employer needs to compensate you. Normally it's 5 times your salary. But if you were at home and you passed away, the employer is not obliged to compensate you. So what this is doing is that this is extending the coverage for Ghanaians. The other thing that it's doing is that it's making it mandatory that employees take this cover. The reason is that currently, as the Workmen's Compensation Act exists, even though the employers have a duty to compensate you, if they don't have money, they can't do anything. But now, through this act, we are shifting that responsibility. The responsibility will still be with the employer, but the insurance company is bearing the risk because they will be paying premiums for that. So the group life is going to be an extension of the Workmen's Compensation Act. The other bit is that we are tightening some of the laws around the marine insurance. So we want to make it clear that every good that comes into Ghana needs to be insured. Currently, we estimate that only about 6 or 7% of imported stuff are insured. We've had a number of deliberations with the Ministry of Finance, with SEPs. All this is in a bit of making it enforceable, and there's a lot of work that we are doing to do that. So those are some of the things that will come into it.
I have a question about these new products. I would assume that it will involve other stakeholders. So let me take the Workmen's Compensation one or the group life, it will involve an insurer, an entity that employs people. So I assume something like the Ghana's Employers Association will come on there. You mentioned the pharmacists, lawyers, etc. Their professional bodies will also come on there. Is the NIC having engagements with these bodies, these institutes, let me call it that, to come to an agreement so that it's not the NIC forcing down insurance products and services down the throats of people? Are there some level of engagements in there?
We are still engaging them, and there has been a lot of engagement. So we had a meeting in which we brought all these stakeholders, and we had presentations on the benefits of group life, the benefit of public liability insurance, the benefit of PI, and why it has to be compulsory. Then after we've done that, we had one-on-one meetings with a lot of these associations and groups as well. The last one we had was with the Ghana Employers Association as well. And everybody understands the benefit of it. The question is about, as they say, the devil is in the detail. Who pays for it? So if you take the example of the medical practitioners, if the medical practitioner practices, but the doctor has it, but the mistake doesn't come from the doctor, but it comes from the nurse or the anesthetist. Who does the doctor's one cover it? So there are a lot of discussions that are there to smooth all these things. For example, you may have a medical doctor who just lectures. He doesn't necessarily do operation. He doesn't prescribe medicine. So does he also have to have that? So there are a lot of things that we are in discussions with them to come up with something that works and works for everyone. But in principle, most of these bodies are in agreement with it. One of the things that we are doing also is talking to the people who actually license them. So you have the doctors, the GMA, but in addition to that, they get license from the Medical and Dental Council. So we seek to have meetings with these bodies that license them, such that they would understand the benefit of why they need to have those insurances. And if they have those insurances, it becomes a requirement for them being licensed. And we've talked to some doctors. I have some friends who are doctors, and they talk about the number of cases that Kolebu has to pay for mistakes that has happened by medical practitioners. So it is a live case, it is a burning case. The case here is finding something that works for everyone. As I started, I talked about the fact that the legal framework is made up of three documents. Yeah. So how it would work, for example, is that let's take group life. Within the Act, it will say that group life is compulsory, and the mechanics of how that will be done will be specified in the regulations. So within the regulations, there will be that says that, okay, maybe if you are an employer, you need to have a minimum of maybe 5 people before this kicks in. If we get down to the line and we find out that instead of 5, it should be 10, or instead of 5, it should be 3, then we can amend it within the regulation. Okay. So that we don't have to do a whole new act in order to do that. So that is why we've gone with having 3 different sets of legal framework, so that gives us the flexibility in order to be able to do this. We understand that government is the biggest employer, and so this is going to have significant impact on them. So we've had discussions with the Ministry of Finance on how this can be implemented in a way that the benefits are obtained, but in addition to that, it's done such that it doesn't become overly burdensome on the Ghana budget. So there's been a lot of discussions with all these key stakeholders.
I asked the question because in our part of the world, and just from anecdotal evidence, you realize that people are very skeptical when it comes to insurance. Even the motor insurance, people don't want to pay, but they do it because you want to run away from the policeman stopping you on the street and asking you where your insurance sticker is. You mentioned government, and I don't know if I'm jumping the gun by asking you this. Where is the new bill right now? Do we expect some finality on it before the year ends? Is it going to roll over into 2020? What's happening? Because when we had a discussion earlier in the year, I thought by the end of, even by November, we should have this done. What's the state? I know you're not part of the process, but you submitted it. All right. What's your ear picking up with regards to where the bill is?
Okay, so the process has been that we had a draft bill that we did. We discussed it with what we call our industry. So those are insurers, brokers, all the people that work within the insurance industry. We gave them the draft. They gave us feedback. We told them which of the feedback we were happy with, which we weren't happy with, and the reasons why, and we developed a new bill. With that new bill, we then had discussions with all these stakeholders that we've talked about. And then we then had to take it to, ultimately, the Ministry of Finance that would submit this to Cabinet, and then Cabinet submits this to. So we had discussions with the Ministry of Finance and his team there. They were been happy with it. We've had discussions with the economic management team, with the Vice President's team about it. We've shared with him the new things that we want to bring in and the reasons why, and they're also broadly happy with it. So the Attorney General is now helping to make sure that the bill assistance is consistent with the other bills that we have, because it is their work. We look at the technical side, but they look at the legal aspect to make sure that. So they are helping us get that. So once that is done, then there will be a Cabinet memo that will go to Cabinet, and from Cabinet it goes to Parliament. We know Parliament starts sitting today, 23rd October, and we want it to be considered as part of that sitting. So there's a lot of frantic work going about trying to get all this thing done for it to go to Parliament within this sitting. Once it goes to Parliament, it's not within our hands, but we would do all that we can to help ensure that it is passed within this year. We know next year is an election year, and there will be a lot of things happening within the year. So we want to work as much as possible to get it passed this year.
So it will be ill-informed to give a timeline on exactly when the bill will come out. So
we've done so many timelines. I don't want to give
another one again. You want to promise to stop making promises.
Yes. Yes.
Okay. In our discussion earlier on also in the year, we looked at the penetration rate, and at that time, the figure you gave me was 1.6%. Your recently released annual report has put that figure at 1%, the penetration rate. Now, I was in a meeting where they were discussing penetration rate, insurance coverage, etc., and then there was some confusion. Square that for us first and tell us what this 1% means.
Okay, so the insurance penetration rate basically is a ratio, and is a ratio of the gross premium sold by the insurance industry to the gross domestic product. And as you know, gross domestic product basically is the value of goods and services that are produced within a country. So the insurance penetration rate is basically saying out of the total value of goods and services that are produced within the country, how much of it is produced by the insurance sector. And currently it is 1%. Sometimes when we say 1%, people think that it can go as much as 100%. If it's 100%, then what you are saying is that all the goods and services within the country is produced within the insurance sector. So it will never go to 1%. That of the UK, that of Germany, that of all of them hover between 6 and 7%. So those are what the developed market, developed insurance market, those are the sort of ranges. There are some countries in which there is higher than those sort of ranges. One is South Africa, one is Luxembourg, Bermuda, Ireland, and those are countries that because of offshore market and because of tax incentives, there is a lot of reinsurance based there, and so it kinds of distorts the market. If you look within Africa, the countries that have higher penetration than that are South Africa, which is around 14–15%. Then there's a like of Mauritius, then there's Morocco, and then there's Kenya, and then you come to the likes of us. Nigeria is 0.3%. So I know our jollof is better than them, and our insurance penetration is also better than them too. Better than them. But if you look at Ivory Coast, it's also just around ours. Ours is just slightly bigger than them. So that is the market that we have. You also talked about insurance coverage. So insurance coverage is the proportion of Ghanaians that have insurance, and currently is about 30%. And if you look within Africa, we are the second highest. South Africa is the highest, that has 60%. So there's scope for us to improve, but there is a lot more that can be done. But a lot has also been done. And people always ask, how come your insurance coverage is high but your penetration is low? The reason is that we have made a lot of success in what we call microinsurance. So that is the insurance for the low-income segment of our population. And there they will be paying like 4 cedis for coverage of 1,000. And because they are the people that buy more of the insurance, they are the people that has given us a lot of the coverage. What happens is that their premiums are not large enough to be able to dent the insurance penetration rate. But the cover, nonetheless, is so important. Okay. So we've looked at the microinsurance sector. It has done really well. But we think that there's a lot more that we could do in that sector. And all that kind of work we do there would really increase the coverage, but not necessarily the penetration. So some of the things that we are seeking to do when it comes to the coverage is that we are targeting agric insurance, because a lot of our population, if I have my statistics, over 40% of the population work in agric. So if we are able to get them with insurance, then it will really increase the coverage of insurance. So we are working with some donor, AGRA, to develop a national insurance policy. And there's going to be a meeting at the end of this month with key stakeholders, Ministry of Agric, Ministry of Finance, Cocoa Board, GISAL, and a lot of other key stakeholders, so that we look at these draft agric insurance policy for our farmers and fishermen, because it doesn't only cover farming, it covers aquaculture or aqua farming as well. So it will be a comprehensive thing, and to look at who funds it, the mechanism around how it funds it, and all the other bits. And so that is tackling agric insurance, which will really help the coverage. The other bit which we are also looking at in terms of covering the low income segment is what we call insurance for MSMEs. So these are micro, small and medium. So individuals may buy insurance, but because they're a dressmaker, because they sell in the market, their risk is not just the personal insurance they buy, they also have other risks as well. So we are talking with the insurance industry to identify how they can develop product that suits them. And not only that, we've had a number of what we call clinics for these, some people, artisans, our market queens, and every Thursday we've been having it for over a month now, getting feedback from these individuals as to why they don't buy insurance, how the insurance can be designed better from them, how we can make the customer journey when they are buying insurance as seamlessly as possible. And so all that is going to help us to be able to design products that would really help the MSMEs. So that is what we are doing in terms of increasing the coverage. When it comes to increasing the penetration, what we are doing on that front is, one, the compulsory insurances that we've talked about. So that would help. In addition to that, motor is our biggest class of business. In the non-life, they account for 37%. And so if you look at the insurance industry in total, they account for maybe 18%. So if we're able to handle the issues around motor, it means that we can get a lot of growth within the sector. I said it somewhere else that the DVLA tells us that the cars that it does the roadworthy for is about 1.6 million each year. And we insure just under 1 million. So that tells us that there are roughly, give or take, a very high proportion of cars that are either using fake insurance or are not insured at all. So we are doing a lot of work in order to be able to bring all those on board and buy buy insurance. And part of that is what we are calling the motor insurance database. So what that would do is that it will give us a means by which, through a USD or checking online, police and the public at large can be able to verify the authenticity of a motor insurance sticker. And doing that, and also collaborating with the likes of DVLA and other bodies, will be able to bring all these on board, and all that would also help. Then the last bit that I'll talk about is annuities. We want to grow the market through the adoption of annuities. Annuities is very big in some countries. And
just for a breakdown session, sorry to interrupt you. Annuities. When you say annuities, what exactly does that mean?
Okay. Annuities is what we call regular payments that people receive until they pass on. Let me give you some anecdotal evidence. A story is told that Ashanti Goldfields, when people retired about 10 years or so ago, they gave them options of giving them a lump sum or giving them regular payments until they pass on, which is an annuity. And those that went for the lump sum, about within 5 years, about 90% of them passed away. Those that took the annuity, within 5 years, over 90% were still alive. I don't know whether those that took the lump sum, they knew they were likely to pass on, but there is anecdotal evidence that those that have regular income live a lot longer than us. And so what we are seeking to do with the annuities is that the Tier 2 pension scheme, we want there to be a component of it that people would buy annuities from insurance industry. That is what exists in all developed countries. That's what exists in Nigeria, in South Africa, in the UK. So if we do that, the benefit of that to the individual is that they will have a regular amount of money until they pass on. This amount of money can increase with inflation as well, so they are protected. The benefit to the economy is that government has what they call patient funds that it can draw on. Yeah. Because these annuities are long-term investment. This money can be invested for longer. And so people there in other countries, insurance companies can even build roads and use the tools that comes out of it to help pay for these annuities. So it allows government to have patient funds that it can call on to be able to meet developmental needs. So it's a win-win for all of us, but there's a need for us to think about the compulsion element. There's a need for us to think about how we can use tax to enforce people to grow, because you are young, you have so many bills to pay, and saving for your pension is the least on your mind. But the government has to play a sort of mommy role by ensuring that a certain bit of your salary is now kept for pensions. And there's a need for discussions around how we can use the tax system to help this be done. And there's been a number of discussions with NPRA, with the Ministry of Finance, on how we can get this done, such that it helps the individual, it helps the insurance industry, and it helps government as well.
This is the business edition of PM Express with me, Philip Nanfuri. My guest, Seth Eshen, Head of Supervision at the NIC, that's the National Insurance Commission. We're taking a quick break. We'll be right back. Right, welcome back from the break, and this is the business edition of PM Express with me, Philip Nanfuri, and my guest, Seth Eshen, Head of Supervision at the National Insurance Commission. Before we went to the break, he was taking us through the penetration rates and the insurance coverage, and he drew that distinction for us. Penetration is gross premium struck over gross domestic product. That's gross premium paid in the economy. We are about 1% as compared to other economies which are doing averagely 6 to 7%. Others are doing better because they are more or less a stop or a haven for reinsurance in there. So you have that, they have higher figures. Now you look at insurance coverage, the percentage of people in the Ghanaian economy which have insurance, and we are doing about 30%. And the NIC is introducing a number of products to grow this penetration and introduce some reforms to grow the coverage. But I want to find out from them if, for example, like the way the Bank of Ghana has its inflation targeting, where it does 6 to 10% as a target for a given year. Does the National Insurance Commission have a target for insurance penetration? Are we supposed to get to 2% by the end of 2020? they've given the insurance companies a deadline for minimum capital requirement. Should we give them a deadline for insurance penetration? So, 1% now. You've outlined how you're going to reach this increased penetration, but we don't have a figure. Should we put a figure to such a thing, or we should leave it as it is?
Okay, so we looked at it and we thought that, as you said, insurance penetration is a ratio of two variables. We don't control all the variables. So the variable on GDP we don't control. The variable that we can influence is the gross premium. So we have an internal target on how much we want to grow the insurance industry to, and that is what we work on. But we don't necessarily have anything in respect of the insurance penetration as well. One other initiative that I didn't talk a lot about is what we are doing in the oil and gas sector. Mm-hmm. So the insurances that come from that sector and in the mining sector as well is what we call the mega risk. So these are very big coverage. So if you look at an oil rig or one of these FSPOs, those ones, the sum insured that if a risk occurs, an insurance company has to pay for is some of them are in the excess of $4 billion.
That's a lot. That's
a lot of money, and no single insurance company can be able to provide this coverage. So what we did when oil was discovered in Ghana was form a pool, and that's a pool of all the non-life insurance companies then to be able to write or underwrite oil and gas sector. They started off taking less than 1%, and now they are itching towards 10% of the risk. But there's a lot more that we can do before we transfer all this premium and risk out of Ghana. We've started work to enable the Ghanaian insurance take a lot more of this risk. But we are also mindful that we don't just want them to take the premium, because when a claim occurs, they should be able to pay for the claim. So we are looking at the reinsurances of these companies to make sure that the reinsurances are solid. We are making sure that they put only a minimum proportion of, a maximum proportion of their equity at risk as well. So there's a lot of work that we are working on that would also liberalize this, because the premiums that goes from that sector is quite big, and it has the potential to really increase our insurance percentage. So you could see that we are working on the low premiums and also the high premiums as well. So together we would be able to increase our insurance penetration as well as our insurance coverage.
In our first discussion, we mentioned there are discussions that are going on with the governing councils, institutes of all stakeholders in these insurance products. But the practitioners themselves, are they putting themselves in a position to underwrite these new products properly? And what's the NIC also doing to aid them in underwriting these products properly, so that we don't have a funny system where, okay, so one insurance company is doing this, one is doing that? Are all these discussions in the works?
All those discussions in the work. I'll talk briefly about a fund that the Commission is introducing. So we have a number of funds, and I would discuss all of them, but let me talk first about the Insurance Education Fund, which is going to be part of this bill. What that fund exists to do is to educate the insurance public on insurance, and it also educate or train the insurance practitioners. So we do organize a lot of training for industry practitioners to give them insight into new things. So we've done a lot of training on annuities, for example. We've done quite a lot of training on other key risk management, other key things that we think are needed for the insurance industry, so that they get themselves ready for some of these new initiatives, or just get themselves up to scratch on new area. The other bit that the insurance education does is to educate the public on the benefits of insurance. So we do a lot of work with all the stakeholders, some of the development partners like GIZ, the Insurance Brokers Association, the Ghana Insurance Association. We do a lot of work. We spend quite a bit of time going across the whole of Ghana talking to over 50 radio stations. That was sponsored by GIZ, which was really helpful in different languages. And all that was educating people about the benefits of insurance. Let me also just talk briefly about the other funds that we have.
Okay.
The other fund that we have is what we call the Motor Compensation Fund. So that fund exists such that if you are involved in an accident with an uninsured car, or the person was insured but the person didn't have a license, or there's some legal reason why the insurance company cannot pay the claim, you come and you write to us or you email us. We will look into the case, and if you have legal basis, we would pay compensation to you. So the compensation will not be as big as what you may get from an insurance company, but it's still sizable. So every month we pay quite a considerable amount of money, in excess of 100, 200,000 to Ghanaians that are involved in accident with uninsured cars. An amputated person gets about 40,000 cedis. So there's that fund as well, which is funded by part of what we call the motor sticker. So the sticker that you place in your car when you buy insurance, part of that money, part of the amount of money that you pay there goes into that fund, and that fund is used to pay for some of these things. And there are other people who also get the fund, and some of them is the National Road Safety, some of them is the police, some of them is the associations that work within our industry, some of them is the National Health Insurance to help with accident victims when they do arrive. So that is that fund. The other fund that we have is what we call the Client Rescue Fund. So the Client Rescue Fund, what it does is that if an insurance company gets into distress and is not able to pay claims of policyholders, that fund comes in to help. That fund doesn't necessarily pay everything, but it pays a certain proportion of the claim. Okay. So currently, if I have my figures right, it will pay up to, I don't know if it's the first 3,000 or the first 5,000, it will pay all of them. And it then graduates, pays 50% up to 10,000, and up to the rest it pays 10%. So everybody gets that. So you know about the case of SH Life, in which SH Life got into distress because of what happened with Capital Bank. Yeah. And so we have released 6 million out of it. It's not sufficient to cover all the claims, because we expect the entire liability to be just under 30 million, but we released 6 million. And what we are doing is we are paying some of the claims that has occurred, and we are also in discussions with the industry, with the Ministry of Finance, to see how we can also pay part of the other bits, because the insurance industry doesn't have a good name already. The name is improving. Mm-hmm. But if this comes in and is sourced the already not so good image, then it will put people off from buying insurance, and that's not what we want. Let me talk about the last fund. Sure. The last fund is what we call the fire fund. Okay. So the fire fund is there to help the fire service, and it's there to help them in order that when there's a fire, they will be able to quickly address the needs of this. It's also there to help with enforcing compulsory fire, so that the Ghanaian public that goes into these buildings are protected just in case fire occurs. So that's also another fund that exists. So those are the funds that we manage for the good of the insuring public.
It seems the NIC sits on a lot of funds, yes, if I can call it that. I think the client rescue one is one people relate with the most, because it will be unfortunate, as we saw with the banking sector issues and then the fund management issues. There's already a problem about paying insurance and you don't get anything back on it. So if a company were to collapse, God forbid, it's something well and good. The fire fund also is, if I may ask, is it a way, also a very crafty way to reduce claims that will be paid on buildings that are damaged from fire? Because if something is given to the fire service, it gingers them to move ahead quickly if there's a fire. Is that a very crafty way of reducing claims that will be paid on buildings that are consumed by fires?
It's part of the reason. So, for example, it ensures that the fire service, when it's done and it's done well, when we get to a very sizable size of the fund, we should be able to help a fire service such that if there's a fire, they can really deal with it as quickly as possible. So it kind of protects the insuring public, and it kind of reduces the liability of the insurance industry. But all these funds were started not long ago.
Okay.
And all these funds are funded by maybe 0.1% of premiums of insurance companies. And so it takes a while for these to build up. And so we would have wished that we had hundreds of millions in the client rescue fund, and then we would have been able to take care of all the policyholders of SH. But we haven't gotten there yet. So it's building up, but it's building up slowly.
Okay. There's a question that has been irking me. National Health Insurance Authority oversees private health insurance. National Insurance Commission oversees life, non-life or general, reinsurance, loss adjusters, reinsurance brokers, agents, etc. A friend of mine asked me, why isn't the private health insurers, why aren't they under your jurisdiction? And is there a time where in our lifetime we would see it come to light, where private health insurance will come under your jurisdiction?
I think there's always a question for the country to always look at the regulatory structure that it has. If you look at the UK, for example, they had the Financial Services Authority, and then they split it to the Prudential Regulatory Authority under the Bank of Ghana, under the Bank of England, yeah. And then they had the Financial Conduct Authority that sits on its own. South Africa has followed suit and has something similar to that. And you always need to think about the benefits of the regulatory structure that you have. There is people have been thinking about, is there a need to have a single regulator for the financial sector because of the issues of related party, because when one of them goes down, it affects the whole sector. So if you have one regulator that looks at all the things happening in a financial group, for example, then what it does is that it gives the regulator a better view. What the government has done is that through working with the World Bank, they have established what we call the Financial Stability Council. So what that does is that all the financial regulatory bodies meet and they look at the entirety of the financial sector. And that gives them a bigger picture, and there's a benefit in there. When it comes to insurance market, if you go to most countries, it's a single regulator companies. So that pertains in Nigeria, South Africa, UK. Even in the UK, a life insurance company is also allowed to write health insurance product. So what we have in Ghana is an anomaly. And I am of the view that there's a need for us to look at that, and a need for us to see if there can be a different structure to that. Because if we don't do that, it increases the regulatory cost of doing business. And if we want to be competitive, if we want our industry to grow, if we want Ghana's economy to grow, even though I'm a regulator, I think that we need to, as much as possible, reduce regulatory burden. And so we shouldn't have regulations for the sake of regulations, but regulations should be there because they are protecting policyholders or helping the industry grow. And I think that the structure that we have is not necessarily the best structure. There are discussions going on. It's gone really far on that, and a decision would have to be taken on that.
But in its entirety, I would deduce from your arguments that it will bode well for our financial system if such a merger or a conjoining, if I can call it that, comes between the private health insurers and the NIC or other insurance practitioners.
I would definitely agree. I would agree to it that you have one single voice. It helps also in the transfer of knowledge between the players as well. And it's just better for ease of doing business, which I think is also a very critical thing.
Okay. We will take a break shortly, but before, I want you to ponder on this and help educate us. government vehicles, police vehicles, I don't see the stickers on them. Maybe I may be wrong, maybe I'm right. Are they or are they not insured? And what gives them that legal backing to roam the streets without insurance, assuming they are not insured? I want you to ponder on this for us. I know you have the answer. We're taking a quick break here. This is the business edition of PM Express with me, Philip Nanfuri, and my guest, Seth Eshen of the National Insurance Commission. She's going to tell us if indeed the government vehicles, and I know most of you want to know whether the police vehicles are insured. Some of you do know already. Me, I really don't know. We'll find out right after this break. Right, thanks for staying with us, and this is the business edition of PM Express with me, Philip Nanfuri. My guest, Seth Eshen, Head of Supervision at the National Insurance Commission. We are at the last leg of our conversation, but before we went on our break, I asked him a question. Are those vehicles insured, particularly the police vehicles? For obvious reasons, we want to know if indeed these vehicles are insured, but the general government architecture, their vehicles, are they insured, please?
They are not insured. So there is a law, which is a 1958 law, which governs whether which car needs to be insured. And that law states that government vehicles don't have to be insured. That law also states that if you can deposit an amount of money, I think it's 200,000, you don't need insurance. If you deposit it with the accountant general, then you don't need insurance. So unfortunately, they are not insured. I have had an experience before in which a police vehicle has hit me, and they didn't have insurance on it, and the person had to try and do that, but he couldn't. So you have to end up doing what you have to do. So as the discussions that we've had with the Ministry of Finance that basically would have to pay us, and those discussions are ongoing as to whether there's a need for us to look again as to whether government needs to insure. Some government bodies already insure. So even though they are not mandated, they have seen the benefits of insurance, and they have seen that it is better for them if they insure, and so some of them are insuring.
We are wrapping up with the year 2019. Very interesting fiscal year, particularly chronicling the events from 2017 down into this year. The budget will be read very soon, all things being equal, in November. The NIC has already told us their plans for minimum capital requirements, deadline 2021 of June. Seth, what do you see going forward for the insurance sector on a three-pronged approach? The regulator, the practitioner, and the consumer.
Okay. For the consumer, what I would say is that our core mandate is to protect policyholders. That is our core mandate. And we've talked about what we can do to grow the insurance industry. That's secondary. Our primary role is to protect the policyholder. And in order to do that, we need to ensure that insurance companies are properly capitalized and they will be able to meet claims that are due. We need to ensure that when claims are reported to insurance companies, they are paid on time. And that is what we seek to do, and that's what we do. So we have a bureau or a unit here that handles complaints from the industry, from the public. And I will advise the public to make as much use of it as possible. Over 80% or so of the complaints that comes in, we rule against the insurance industry. So we are here to look after their interests. We are thinking of ways to make it a lot easier for people to understand what to do. So one of the things we are thinking about is a product feature or a product summary, a one page that will state who the insurance company you've insured with, what you've insured against, the risks you've insured against, what will happen for them to pay. If you are making a claim, the documents you need to submit, where you can make a complaint. So a very simple one pager that would be part of everything. That with that one pager, the public knows exactly what they are buying, what they have to do if there's a complaint, who they can complain to. So I advise the public is a lot is being done to protect them. they should take advantage of the structures that are in place. If you don't let us know that you've been treated harshly, we won't be able to help you. If you just sit there and complain, you just need to complain to the right person. Go to our website and complain, call us and complain, get to us to complain. We have branches in 4 regions, that is Tamale, Ho, Kumasi, Takrady. We are opening additional ones in Cape Coast, Sunyani, and Koforidua. So we are making the sector, we are making the insurance industry more accessible to you. Take advantage of that and let us help you as much as possible. With the insurance industry, we are there to grow the industry. We are there to work with them. All that we know is that insurance is a promise to pay, and all that we seek to do is that they pay claims as promptly. So we have some fights once in a while, but it's all for the good. It's all for the good, the good of the economy.
Okay. Seth, I want to say a very big thank you for your time. That was Seth Eshen, Head of Supervision at the National Insurance Commission. We've had a lengthy discussion on Ghana's insurance sector, particularly on the act that regulates it. We'll see some changes in there that will boost the penetration, that will boost the coverage of insurance in the country. And behind the scenes, Seth was telling me to tell you that, you know what, to go out there and insure your vehicles, your lives, your properties, commercial ones especially, everything. Sign on to insurance products. If there are problems, come to the NIC for your complaints and all will be sorted. He took us to some of the funds they have, the Client Rescue Fund for companies that will fail, and a number of them that are all supposed to bolster confidence and make things smooth in Ghana's insurance sector. I hope you've been well educated. I have. I know I'm going out there to ensure everything from my suit to my tie to my shirt, and everything will be done. And this has been the business edition of PM Express with me, Philip Nanfuri. My guest again, Seth Eshen, Head of Supervision of the National Insurance Commission. Do have a good one. Bye.